Hi, we're going to be having a chat about prop firms, and in particular, the 5%ers. And a warm welcome to one and all. And for those of you who have not seen me before, my name is Langers, and I am the overgrown child that is the Scruffy trader. No shock looking at my desk with all those toys on it. And what I'm trying to do is kind of inspire you with your own trading, maybe show you a trick or two along the way. So if that sounds good, please smash the like and click the little subscribe button. It genuinely helps. And if you are subscribed, check the bell icon. So what are we having a chat about over coffee today? Well, it's prop firms, and in particular, the 5%ers. But why the 5%ers? Well, as many of you know, I run a small group called the Scruffy Squad, where we share learning and try and encourage each other into being better traders. And a number of the guys have expressed an interest in the 5%ers. And they asked what I thought and is it worth it? I thought the easiest way to do it is to deep dive into the website, have a look at the T's and C's and see what we find. But I guess the first question you need to ask yourself before I open up this screen is, what is a prop firm in the first place? Well, in layman's terms, a prop firm is an investment company that will put up the money for a trader to go to market and hopefully profit. And then what they will do is there'll be a profit share between the trader and the company. And it's an easy, low barrier to trade bigger funds with somebody else taking the downside risk. And that's the easiest way to describe a prop firm. So let's have a little look at what the 5ers are, and we'll find out whether it's good, bad or indifferent.
Well, we're waiting.
So who and what are the 5%ers? What do they have on offer? Well, they're very easy to find. I've dropped you a link in the description and comments below, and I'll take you straight to the website. It'll also give you 5% off any fees if you wish to take up the funding. So having spoken to the guys and had a good look through the T's and C's and the website, my general feeling is they want the trader to be on the platform for the long term. And they do that by investing in various resources and really encouraging you to follow the milestones that they lay out. Now, they start this off with all of these resources here. There's loads of videos, there's a good blog, but more importantly, there's a trading room every working day which generates trade ideas. They have live streams and webinars to encourage you and make you better at what you do. And they've also invested in a trading course that'll help you refresh your memory or maybe give you a new skill set. And talking of skill set, this again is where the 5%ers look to set themselves apart from other prop firms out there. You see, a lot of prop firms will restrict the type of trader that they have on the books because they won't let you trade the news. They won't let you have overnights. They won't let you trade through a weekend. So it really restricts the trader, because if you're an aggressive scalping trader and you like to trade non-farm payroll, you can't. If you are a swing trader and you're holding for a couple of days or a couple of weeks, because they won't let you have overnights or over weekends, you can't. Whereas the 5%ers have recognized this and they let the trader do their thing. What these guys are interested in is enhancing the type of trader you are so that both profit at the end of the day. And the way they do that is remove the barriers. Now, there is only one barrier that I can see, and that is you are restricted to trading Forex only. So it's the major Forex pairs. There doesn't appear to be any commodities or indices. But that's not to say it's not something in the future. But at the moment, it is Forex only. Okay. So as you move down into what they have on offer, which is the meat and bones of this video, I guess, it is split into 4 pots, depending on your budget for your initial fee. And then each one of those pots is split in 2, depending on your character profile. And you choose wholeheartedly yourself. So if you have limited budget and you want to start, it's as little as $275, going up to $875, and the pots increase just the same, 24, 40, 52, 80. Now, when you look at the fee compared to what you get in return, it's actually really good value. And the way I read into this is, yes, you will have some traders complain saying it's 4% drawdown and that's tight. But that's what trading is. As traders, you should always be looking at downside risk and understand that in order to stay in the long term of trading, you have to cap your risk. Now, these guys are capping their risk by saying, we'll allow you 4%. Once you go beyond that, that is it. Game over. And it makes you slow down. And you'll often heard me say in my videos, if you follow me, less is more. And the reason why I say that is because if you go at it all the time, you're going to hit a hard wall. Whereas if you just slow down, look for the A1 setups all the time, you become consistent and you become profitable. And looking at this is definitely what these guys are promoting. So that sits with my hymn sheet incredibly well. So let's deep into this a little bit. So we'll use the 40,000 as an example. You have a 4% drawdown cap, and that doesn't matter whether you're low risk or aggressive. The differences between the two are the profit stakes. You are looking to grow by 6% on the low risk. You are looking to grow by 12% on the aggressive. And then there's a change in the time scale for that as well, because you have 180 days in order to achieve your 6%, thick end of 6 months. Whereas on the aggressive, you only have 60 days. All right, so they're the major differences. But in order to give you the tools to achieve the task, that is done by stop loss and leverage. So on the low risk, you have a mandatory stop loss that cannot exceed 1.5%. So again, it's slowing you down. Marathon, not a sprint. And your leverage is 1 in 6. So it really is. Just take your time, chip away at it, and get there. Whereas on the aggressive side, because a scalper, etc., would need the extra leverage in order to just load up, get in and get out, is 1 in 30, and you are not restricted on your stop loss. Okay, so depending on your profile, there is an opportunity for both sides of the coin. Personally, I would be looking at the low risk, slow and steady growth, work out what your risk tolerance is, and then divide your 4% by that tolerance. Okay, but I will do videos on how to manage and help that journey if that's what you're after. So say you've done the initial test, you're getting your 6% on your 10,000. What does that mean? Because you're supposed to be trading at 40,000. Well, what they've done is, and again, it stands them aside from other prop firms. Most prop firms will make you trade on a practice account for 30 to 60 days, and then you need to achieve your profit growth within 30 days, quite a short period of time. And it's taking you quite a while to see your realized profits, because you're doing your practice to start with, then your evaluation, then they're letting you loose on the market. So for all it's 30, 30, 30, that's like 90 odd days, depending on who you're working with. With these guys, you are live in the markets, making profit day one. And rather than just say, there's 40,000, get on with it, they will give you a quarter of it to see how you get on. If you achieve the milestone they've set out, which is 6% in the 180 days, and it's the same across all of them, they will then fund the full amount. But it gets better than that, because once you've got your full amount traded, your timescales are taken away, you're then looking at a percentage growth for your milestones. And the way they do that is down here with profit targets. Now with your low risk, it is 10%. With the aggressive, it is 25%. And every time you've hit this milestone, they will double the account till it hits over £1 million. And then once you get your £1 million account, it is capped. That is it. That's as far as you go. So it doesn't matter where you start, you can work your way up to the 1.2 million. Okay. And for the example we were using, the 40,000, it's 1, 2, 3, 4, 5, 6 steps. It's not that bad. And it's 10% each time. So each time you've done 10%, it doubles. So you do 10% of your 40, they give you 80. Do 10% of your 80, they'll give you 160, so forth and so forth. And what you'll find is your wages, just by doing your job time and time again, increase. So I can't see much of a downside to this. Not really. I've had a good look through it. There are certain criteria where if you break the rules, they'll give you a strike, and if you get a number of strikes, then you'll get told off. But it's not a case of you break the rule once and you're out, like with other guys. It's all there to guide and mentor you right the way through to be a profitable trader. And ultimately, as I was saying at the start, how prop firms make their money, that is what they want. They need you to be profitable so they can be profitable. And in order to do that, they provide the resources and they guide you through the whole process. And for the value of what they have, these amounts here, they really are good value. Because if you're looking to open up a £500 brokerage account, for argument's sake, or $500, that's how much you're risking. You could put it into these guys, you're still risking the exact same amount near enough, but your rewards are better. It's just my take on it anyway. And to sum up, you've got your choice of platforms. Doesn't matter what type of trader you are, they will accept you. As long as you stay within the rules, they will reward you. And that's it, guys. So by all means, check the link, get your 5% off, and it's worth a go. And who knows, I might even trade it with you. So with all of that, do what you love, and the money will follow. See you all in the next one.